Good morning, everyone. This is Todd Brow with Senior Insurance Marketing, and I have the pleasure of having Andy Larson with us with National General. He's going to talk to us today about short-term medical. It's a huge opportunity that's out there. A lot of people are needing short-term medical coverage, and there's a lot of uses out for that product. So without further ado, I'm going to swing over to you, Andy. Andy, take it away.
All right. Well, thank you, Todd, and thank you for tuning in to this presentation. We're going to make it worth your while today. Talk about a couple different things, as Todd mentioned, short-term medical and its relevance in today's market. No matter what type of demographic that you're working with, whether it's approaching 65 or whether it's a child or anywhere in between, short-term medical has many different uses. So as part of your toolkit, I think you're going to find it useful. But at the end of the day, we want to get you comfortable with National General, number one. But number two, talk about what we do in totality. So therefore, as you understand what products are available to you, the best ways to go about your practice and working with National General to not only maximize your clients' coverage and providing them the best overall benefit solution, but also to maximize your revenues as well. So you understand what's available to you and how National General can make it simplified for you to go about doing business with us. So with that, about National General, we are not an ACA carrier. We are a year-round healthcare financing solution company that has many different solutions for you to take advantage of with your clients that are simplified to understand. They're diverse. So one product might be fit for one client, another might be different for another. But if you are in a particular line of business, such as P&C or maybe your financial planner or Medicare, they can go along with any type of core product that you sell or core client that you focus on. So we'll talk about that here in a minute. And with working with National General, you will have access to a platform that allows you to quote multiple facets, direct to face-to-face to your client or over the phone. Or if you are sending a quote to your client, consumer enrollments, we make it simple yet flexible for you to enroll your client. And at the end of the day, when you work with National General, you have a team approach from a standpoint of your service, a hands-on approach to help you not only get comfortable with National General, but remove roadblocks that might get in your way that might slow you down in the sales process and prevent you from getting to the next client in a timely fashion. So our team is here to support you along the way, and we'll throughout this presentation, we'll cover a lot of this, not only from the product line, but down to the service aspect of it as well to get you comfortable with NatGen. So with National General, our portfolio is, again, very broad. We are in the under 65 space on the specialty side. We are not an ACA carrier. So again, you can sell all of our products year round, even though the majority of our sales or a good chunk of our sales come in that open enrollment period. We haven't slowed down since the enrollment period, so that's good for us, and it just shows the need in the marketplace for these type of products. But we've cut our teeth as National General with our short-term medical product. We've been very innovative over the years in terms of bouncing with the changes in that space in terms of durational components, limitations, and whatnot. National General has emerged as one of the leaders in this space, the short-term medical market. So when agents think of short-term medical, National General is one of the two names that will come up. But we do more than just that. We offer a suite of other products, such as fixed benefit indemnity plans. Some might call them limited medical plans, but we call them fixed benefit plans. We are revamping that portfolio as well, so stay tuned for more information on that. Well, also, we are very intuitive in terms of how you can provide a benefit package to not only solve for maybe why your client buys a core health insurance plan, but also to protect your client from that out-of-pocket exposure that they might face, and that's with our supplemental product line. Dental is always a slam dunk in that regard, but accident, critical illness, specified disease plans, hospital plans, you might sell those in the senior side of things as well, but on the under 65 side, these products are very important, are becoming more mainstream. We'll talk about how you can put together a well-rounded plan for your client. And also on the individual side, we have entered the senior space here in the last year and a half. We recognize that with our success on the under 65 side of things, that the third leg of the stool, if you will be on the senior market. So we developed our Medicare supplement product line, Went from 0 states in June of 18 up to now 42 states. And we are continuing to grow out that senior space as well, with more product coming down the pike here in terms of senior dental and also senior limited medical as well. So be on the lookout for more information throughout the 2020 campaign for more information on those products. Lastly, put a plug in for our partners at National General Benefit Solutions. They market our group level funded plans, another alternative to ACA bronze, silver, gold on the group side that has become more mainstream in today's ACA environment as well. So for more information on that, let us know, and we can connect you with the right people to get those products in your hand as well. We are a national company, so when you look at a National General, you'll be provided with a product grid, or you'll find this in your back office. It will let you know what products are available in each market. So if you do have your specific market that you work in, but you might fly across the borders to work in other markets, just know that not all products are available in every market, but all products are available in some markets. So depending upon what zip code you're plugging in, the appropriate products will populate in your quoting tool. With that, we're here to talk about more importantly on the short-term medical side of things. And with short-term medical, your opportunity, again, it's a year-round opportunity to stay in front of your clients and to serve a multitude of needs. We'll talk about who's buying short-term medical here in a minute, but at the end of the day, short-term medical ACA has posed many benefits to those who have not been able to buy health insurance in the past prior to ACA, based upon maybe medical need or an affordability factor. But for just as many people as ACA has helped, it's actually impaired as just as many, if not more, from a standpoint of those who just want to have catastrophic coverage, or those that maybe don't qualify for a subsidy. They've seen skyrocket in their rates year over year, and an increase in their out-of-pocket exposure, decrease in the amount of doctors that are available to them within networks. So from that standpoint, ACA has done well, but also has emerged the specialty market where short-term medical comes into play. So your opportunity as a trusted advisor is to identify your client's scenario and recommend a solution that will fit their needs, whether it's ACA or whether it's an alternative. You might find that your role as a trusted advisor versus perhaps say, here's your 4 plans, becomes more valuable to that client, and that can open up more opportunities and other products as well, and open up more opportunities for revenue generation. But in terms of short-term medical, who is buying short-term medical? Prior to ACA, it was your traditional buyer. Newly independent, someone who might have been coming off of their parents' plan, somebody who has a 30-day waiting period or 90-day waiting period on their group plan. They need to bridge that gap, or they're looking for a more affordable option to COBRA, which can be very cost prohibitive for many. Clients awaiting Medicare eligibility, maybe that early retiree. Those who are here maybe because they were a international student. With some agents have made a living off of selling short-term medical to the college space. So from that standpoint, that's prior to ACA, the traditional buyer. And in a lot of cases, and in totality, the traditional buyer is still there. But where short-term medical has exploded out of the scene with ACA is that, especially at this time of year, right now we are outside of open enrollment. To obtain ACA compliant coverage, your client will need a qualified life event. Absent that qualified life event, short-term medical is the next logical choice to get that client from this point in time to the next enrollment period, or to whatever type of coverage comes next, whether it's a group plan or whatnot. And with short-term medical, there has been expansion and involvement to not only bridge that gap, but also utilize it as a alternative option to the status quo. Short-term medical is a unique product. It is not guaranteed issue, nor does it cover for pre-existing conditions. But for the right client, it can provide an affordable option for durations anywhere up to 36 months in a lot of cases. But it's for those who have been maybe marginalized because of lack of subsidy, because they are healthy and they only want to have coverage that they need. People are making the conscious decision to purchase this type of product because of those reasons. And statistics show If you were to survey consumers or look at statistics of consumers who purchase health insurance on their own, this is a statistic taken from eHealth. In 2017, those who were not eligible for a subsidy, who were going to buy insurance on their own, 5.5 out of every 10 buyers purchased short-term medical coverage in 2017. In 2018, with rate increases and with subsidies being tighter to get by, that number rose to 7 out of every 10 buyers without a subsidy were purchasing short-term medical. The jury is still out for 2019 for the last enrollment period, but at the end of the day, you can see this trend of where short-term medical is an opportunity not only for that traditional buyer, but for those who feel marginalized by ACA as well. And playing to the focus of senior insurance marketing, being that your focus may be towards seniors, is that the senior market has also posed a need for short-term medical as well. For those who are maybe 65 or pre-65 who are retiring early, or maybe there's a spouse that turned 65 or the other spouse is still maybe 62 or 63, and the spouse that is T65 held the insurance through their employer. People are buying short-term medical in this case as a cost-effective alternative to that COBRA and to fill in that gap for that spouse who may have a couple years left. And we'll talk about here how short-term medical has evolved in terms of durational component to really play toward this type of a market as well from the senior standpoint. So we'll talk about all this in a little bit, but just to give you an idea of who is buying short-term medical, there are many different reasons why people are buying, and we'll go through more of that here toward the end of this presentation. But we mentioned that short-term medical is not guaranteed issue, does not cover for pre-existing conditions. So making sure that your client is a right fit for short-term medical is always the most important to know if they are suited for this concept or not. Do they qualify for a subsidy? Are they planning on having children in this next plan year? Do they have medical needs that are going to be requiring first immediate coverage? If the answer is yes to those, then you ultimately would want to take your client down the road of ACA. But if they are willing to trade that risk of limited coverage for an affordable price, maybe they're a 50-year-old that doesn't want to pay for maternity benefits, or because they earn just right outside of that amount that they don't qualify for a subsidy, but that high premium is going to really impact their budget, you can offer this solution to those clients and provide them a premier choice for their a premier choice of premium dollar for their health plan needs, and package it with solutions that will still provide them a substantial savings to the status quo, but also protect them from out-of-pocket exposure as well. So we talked about how durational components have opened up here. So we'll talk about how long you can actually write a short-term medical plan. And now this will vary by market because each state has their own set of rules. But for sake of many markets, you'll be able to understand what is available in each state. But we have complied with some rules that have come out here by the Trump administration, October of 18, that extended durational components on short-term medical up to 36 months where states allow. So in most markets, National General offers the following. Durational components up to 12 months. That's the traditional form of short-term medical, how we've always gone about it. But up to 12 months or 12 months minus a day, 364 days, whatever you want to call it. That's the standard option that we offer. But now with the changes in the rules, we will now offer anywhere up to 36 months with renewable plans. Your client can either choose a 1-year renewal for 24 months of coverage, or 2 years of renewal, which will total 3 years of total coverage with the renewable option. If they choose the renewable option, they'll know what their rates are for that first year, but on the second and third year of that renewal option, the rates will be unknown until the time of renewal. They will know the renewal rate prior to that. That said, at the time of application, you do have the option to provide your client a rate guarantee buy-up, so they can pay extra premium for certainty on that 24 or 36 month coverage durational period. So that creates a level of certainty for your clients as well, that they know what their premiums are going to be for 3 years, 3 years certain, and they won't have to worry about at the end of the first 12 months or the end of the second 12 months what that Russian roulette on the premium is going to be for that next plan year. Especially if you have someone who might be 62 or 63 years old, that is going to be that transitioner to Medicare. You can provide that budgeted, that certain premium, so that way they won't have to worry about what that premium spike might be, especially if they're already on a fixed income. Now, the third durational component, and this is where we get a little bit creative with regard to some of our ways of structuring, is our consecutive or stacked plans, and what I'm going to reference today as 12x2. So as opposed to a renewal plan, where a renewal plan is one contract that renews every year up to 3 years, the 12x2, we actually will issue 2 contracts at the time of application. So with the 2 contracts at the time of application, your client will actually know what those premiums are for both terms at the time of application without having to choose that rate guarantee buy-up like you would have to on the renewal plan. So this is a great option for your clients as far as knowing certainty for 2 years, whereas on the renewal plan, if they do that rate guarantee buy-up, the premium might be a little bit more. If they do the renewal plan without the rate guarantee buy-up, now you have that element of uncertainty on the premiums for years 2 and 3. The 12x2 provides you that sweet spot of premium, but it also provides you the certainty on premium as well when it comes to the durational component and extending the runway to a point where it may or may not be looking at rewriting a renewal plan after 2 years or after the first year. So we'll talk more about this in a minute and who might buy what. But also with the durational component, there's also an impact on commissions. So on the up to 12-month plans, your standard commission will apply. There'll be no changes. But on renewal plans, if you are selling a renewal plan, say for 3 years, the first year you will have an increase in premium, so a heaped premium for first year, but then years 2 and 3 on that renewal option would be reduced. If you take an advance, your advance will be eligible for the first year only. Years 2 and 3 will be as earned only. On 12x2, it's a standard comp applies as well, but where a renewal plan will reduce years 2 and 3, the standard comp will stay level for both years. And in addition, if you are in an advance for each contract, your advance will apply for each new policy. So first 12 months, you can get up to a 6-month advance, then as earned for the remaining 6 months of the first 12. And then once that new policy activates, then you would get another advance for that second policy of up to 6 months. So this is where consecutive plans are available only, where renewal plans are available only. And again, there will be grids that are available in your agent back office that will tell you, based upon the state you're marketing, what durational components are available and what renewal components and 12x2 components are available in your market as well. Now, with our short-term medical product itself, with some of these durational changes, we've actually done a complete refile of our product line in all 39 markets where we have our product available. We are still waiting approvals on some markets, but once we get all approvals in, we will be replacing all of our footprint with our new short-term medical PPO plans. And within that PPO plan set of benefits, there's going to be 3 different buckets of plans. If you are familiar with National General's short-term medical as it was prior to our filings going through, you'll find that there is a level that is similar to what we offer prior to the new PPO filings being approved. We do offer next day effective dates, but with our next day effective dates does come a limitation on sickness. Any claims for sickness within the first 7 days of a next day effective date plan will not be covered. We'll cover for accidental injury only. But if you have an effective date that is 8 days out from the day the client signs their policy, then we will waive that waiting period for sickness. Common sense prevails at that point. But when you look at a brochure, you'll find the benefits that will be laid out as such. If you start from left to right, underneath plan, that will apply for the description for all plans going across. But the first level or the bottom level is our Essentials PPO. Our Essentials PPO is going to be that low-cost option for someone who might be on a budget. It's going to have a limitation on coverage period maximum. And I say coverage period because some short-term medical carriers will have a lifetime maximum on their payout. But our Essentials PPO will also have a limitation on outpatient services of $15,000. Moving across, our Enhanced PPO will have $1 million of coverage period maximum, but we'll have more options to choose from. The most popular option that we see agents write today is our 5K 100% option. It's a clean, simple number. 5K is a palatable number for many consumers, even though it's still considered maybe a high out of pocket. But in today's ACA world, 5K out of pocket is actually pretty low. But when you look at where agents might say, well, how can I deviate from this? If 5K 100% is 1.0, 1.0 on the premium relativity scale, they might look at 5K 50-50 to another 5K out of pocket. So for a total of 10,000 max out of pocket, you might find that level, that plan is going to be a 0.73 on the relativity scale compared to the 5K 100%. So if you can free up 27% on premium, that might provide some opportunity to backfill for additional products and more revenue generation for you. We'll show you that here later on. But on Essentials and Enhanced PPO, for outpatient prescriptions, there is no coverage for that on an outpatient basis. On an inpatient basis, there is coverage for prescriptions for name brand and for generic. There is no limitation on inpatient prescription, just outpatient. So keep that in mind as well. But as you go across the spectrum, and our last bucket is our copay enhanced. Our copay enhanced is going to provide us with a $5 million coverage period max. But then also as you go down, you'll see that there are copay options now for primary care and specialists. So for the copay, it is 2 per person or 4 total per family for a 12-month policy, or anywhere from a 6 to a 12-month policy. For 6-month policies or less, it is 1 for an individual or 3 for a family max. Any visits subsequent to that are subject to deductible and coinsurance. In addition, you're going to find a $10 generic copay on medication as well, a generic only. Discount on brand name drugs will be subject to discount, whether it's being utilized through a GoodRx service that a consumer can go find on their own, or if they were to utilize the Life Association membership through NatGen that we'll talk about here in a second as well. But general benefits, as you look at the brochure, will apply to all plans. Where we'll talk about some of this here in a minute, but where we also have a leg up is in terms of adult screenings, subject to deductible and coinsurance, does not include any waiting periods as you might find on some other plans. And in addition, we cover first dollar for child immunizations up to age 18. So those are some enhancements that we've made to our contract as we've shifted with the durational changes that the administration has put forth toward carriers. So I'm not going to go through this any further in terms of the brochure itself. You can access the brochure and you can drill deeper into it and look at different options. But we'll show you some practicality of this here in a minute, and rate relativities as well, as to determine, hey, which one should I focus in on? What plan bucket, what plan lane? So you understand if you're driving a car, you might drive in one lane of traffic because it's a different speed, it's slower, it's faster. Same with the 3 lanes that you see here. We'll talk about why one might be better over the other. And then I'll also talk about the durational levers to pull as you go through this as well. Lastly, you'll find that's not on here is that we do offer a guaranteed issue short-term medical. We talk about how short-term medical is not guaranteed issue. There is simplified underwriting. Touch on that here in a minute. But if your client does not qualify, but they have no other options, we do have a guaranteed issue option available in most markets for your client to fall back on to get them from that point in time to the next enrollment, or to bridge a gap before maybe a group plan starts. So one of the questions that we get is, well, talk to me about your network. Does it cover only a certain few systems, or how does that work? With our short-term medical, we have traditionally contracted with the Aetna Open Choice PPO, which encompasses about 99% of Aetna's best network. It's about 700,000 plus facilities and providers. So the phrase "you like your doctor, you can keep your doctor" in a lot of ways rings true with our short-term medical plan. Whether your client is within the borders of your state, or if they travel outside frequently in the United States, you'll find there will be a lot of providers included within this network to provide your client service and discounts to keep them in network. In addition to the network, one of the features that has been a differentiator for us has been on the urgent care side. So someone who's purchasing short-term medical typically may not have a whole lot of ongoing health concerns. So they're buying short-term medical for just in the matter of the what if. And when they need to go to the doctor, it's typically going to be something that says, "Hey, you know what? I'm bleeding here. I have 103-degree temperature that spiked out of nowhere." Typically, they're not making an appointment to go see their doctor in 5 days. They're going to an urgent care facility. And where our benefit differentiates from most is that we will have a common $50 access fee like other carriers might, but other carriers are going to subject the remainder of that bill to deductible and coinsurance. At National General, we're waiving the deductible, so after the access fee, your client is only subject to the coinsurance. Case in point, if your client has a $5,000 deductible, 100% coinsurance plan. On others' plan, they pay the $50 and then the remainder of that urgent care bill toward the deductible. With National General, your client pays the $50 access fee, and then the remainder of the bill is subject to coinsurance. If your client has 100% coinsurance, National General is paying 100% of that bill. So therefore, with Nat Gen, on that scenario, your client only pays a $50 access fee for that urgent care. Very, very, very affordable for your client to utilize National General short-term medical in the event of that urgent type of event. Other plan benefits: emergency room, inpatient, outpatient. Again, remember the $15,000 limit on essentials, but these are benefits that all apply to deductible and coinsurance. The inpatient meds are covered under the inpatient services as well. So although outpatient medication is not covered on enhanced or essentials, inpatient is still covered, no maxes. On other carriers, you might find there might be a cap on inpatient meds. We have no cap on inpatient meds. That's another differentiator for NatGen. I mentioned also too that your client can also obtain pharmacy discounts through our Life Association. With our short-term medical filing, we do file our product with an association of life membership benefits. And if in most states or some states, this is how we file our product, so it will come along with the product no matter what. In some states, it is optional, such as Nebraska, Missouri. So therefore, if your client is, or you don't choose this option for your client, it will not be included within the scope of the coverage. But the value on this product is a $15 a month value to the premium. But aside from the prescription benefits, to me, the most valuable benefit that your client is going to obtain, and again, this is toward that short-term medical type of buyer who might only be utilizing the benefits in the matter of the what if. If they're looking for that more day-to-day coverage, the benefit out of this association package or membership package that they're going to utilize is the telemed for life. They have the ability to connect to a physician via phone or video 24 hours a day, 7 days a week, and there's no cost to do so. So again, to triage those symptoms that they might otherwise go to urgent care or have to make a doctor appointment for, they can go to telemed for life as their first line of defense and get those symptoms triaged. And a lot of times they can get a prescription sent to their pharmacy, and therefore they won't have to make that doctor appointment. They won't have to go in and pay the $50 access fee, and then the rest subject to coinsurance. If they utilize this service 2 or 3 times over the course of the plan year, they pay for that $15 per month service over and over, probably a couple times. But in addition to the pharmacy discounts and the telemed, your client can also get the discounts that apply for consumer purposes, fitness center, travel discounts, entertainment discounts. I have an agent in Missouri that utilizes this for tells his clients that if they need new tires on their car, they can get a 15% discount by accessing these discounts through this membership package. So there's a lot of different things that this can provide, and then from a selling point, you'll see a lot of maybe perhaps group plans that will offer benefits such as gym discounts or this and that. This is the type of benefit that as a value add that can be added on, and it can continue on, in fact, after the short-term medical plan expires. Now, if your client is in a market where this is not available, we do have a My Life Wellness standalone product. For example, in the state of Iowa, it's an individual file state, so it's not available to be added on. But you can choose the My Life Wellness standalone product to provide all these benefits to your client and still provide that need. That's at a $19.95 value at that point. So from a standpoint of product, that's what you can expect. But from an eligibility standpoint, primary applicant is age 60 to 64 years and 10 months. So we do child-only policies, but also on the other end of the spectrum, if your client needs to bridge 3 or 4 months between 64 and a half to Medicare, we will write a policy up to 64 years and 10 months. In terms of underwriting, some carriers will have more stricter underwriting from a standpoint of rate-ups or declinations, or just taking a week or so to get the policy through. Our underwriting is going to be simplified. We ask 5 questions of the client, and they're going to either answer yes or no. If they answer yes to any of the questions, that would be an automatic decline. If they answer no to all the questions, that is an accept. And from that standpoint, then the policy is issued. And when we issue the policy, we also actually do a IntelliScript check. So even though they answer no to all the questions, they could still be declined. The IntelliScript check just does similar to what an MIB hit might be to determine if the client is taking any medications that we need to know about in terms of something that might have been otherwise declinable on the application. It does 2 things. One, it allows you to, on the front end, to understand, well, Mr. and Ms. Client, you're taking medication for X. Perhaps short-term medical is not the best option for you if you're comparing it to another scenario. B, or number 2, on the other hand, is going to be 6 months down the road. If they do get a claim processed for whatever that condition might be for which they are taking medication, that avoids having to have that awkward conversation with underwriters to me to you, and you to your client about why there is a rescission. So it does 2 of those things. But at the end of the day, it's making sure your client's in an appropriate plan. I think first and foremost, we can agree upon suitability, making sure that you know what your client's situation is so you can provide the best recommendation possible. Now, we talked about 6 months down the road if there's a claim. How we determine if a claim is pre-existing or not is we do what's called the look-back period. On average, the look-back period is anywhere from 24, 36, and in some cases 5 years in the market on short-term medical to determine if that claim is pre-existing. So you look back 5 years from the effective date of the policy in some cases. With National General, we only look back 12 months. So it's another advantage National General has toward the field. We only look back 12 months from the effective date of the first policy to determine if that claim is pre-existing. Now, if you're selling a renewal plan, or a 12x2, after the first 12 months, we don't do a look-back check. We cease any pre-existing checks after the first year. So that's a good deal for your client from that standpoint, if they are extending that runway up to that 24, 36 months on the duration. Premium rating discounts, if your client does not use any nicotine products or has not used in the last 12 months, if you want to call it a non-smoker rate or tobacco discount, or on the flip side, if you want to call it a nicotine or tobacco rating, however you want to call about it, but we do charge less for those who are non-tobacco users. Multi-person discount is so if you have 2 or more persons on the plan, a 10% discount will apply. In markets where you have a 6-month or less plan, we'll also apply a 10% discount. But also, too, where your client has the ability to pay, if they're choosing only up to a 12-month term, They have the ability to do a single pay discount, and they'll get in the range of 20 to 22% on that discount if they are looking to put all the premium onto one bill, whether they want to load it onto a credit card and get points, or for those who are buying short-term medical, a lot of times you'll find that the consumer is perhaps more able to pay a single pay. They're not qualifying for a subsidy, so they may be more financially stable to make that single payment. If they are able to do that, they're looking for a term up to 12 months, no longer. They can get a nice discount, and it can be substantial for depending upon the demographic and depending upon the family status as well. So I talked about picking the plan lane, whether it's the essentials, the enhanced, or the copay enhanced, whichever speed your client wants to drive with their health plan. And to give you some relativities, for example, a 40-year-old male, we talked about that 5K 100% plan being 1.0. Now, again, you look at the 5K 50/50, you'll see that the rating premium discount is, compared to that 5K 100%, you're going to find a decrease of roughly about 30%. So if you look at that relativity, we'll talk about here in a minute how you can use that relativity to make your client's coverage even stronger, even though you went from a 100% plan to a 50/50 co-insurance plan. Now, on the other end of the spectrum, if you're looking at the 5K 100%, but it said, let's look at that copay enhanced. The 8K 100% plan is about a 19% difference between the 5K 100% and the 8K 100% copay enhanced. So you see the relativities there of what that copay might add to the premium. It's about 19%, $20. So determine if that $20 is best spent on a copay, or maybe we can use that $20 a month and we can add an accident plan or a critical illness to help offset that out-of-pocket exposure. Similarly, here on the family side of things, you'll see that a family of four that may make $110,000 per year between mom and dad, they won't qualify for a subsidy. Here are what the relativities would look like on the family side. But as you can see, compared to the lowest cost bronze plan in this particular zip code for an individual and a family, you're finding that the premium savings are 65%, 70% in some cases. So it's substantial when you look at what the individual might pay versus the status quo on short-term medical, and then for the family as well. If your individual is making $50,000 a year, they're not qualifying for a subsidy. At $407 per month can be a substantial hit to their budget. $132 might sound more feasible for them and make it more budget worthy as well for them. Similarly, on a family, if you have a family of four, a $1,300 premium. If you're making $110,000 per year, that's good. That's a budget buster for a family. If the short-term medical concept is suited, you can save your client up to 60% on just the premium alone. This is for a 12-month option. So consider that. Even if you consider a single pay discount, that can even provide your client even more savings as well. If your client is suited for this concept, it's a no-brainer to take a look at it and say, hey, here's ACA, but I have this other option as well that might be suited for you based upon what you're telling me your needs are from a coverage standpoint, and what you're telling me your budgetary needs are as well. So when we plug in the plan lane with the durational levers, if we use that 5K 100% co-insurance plan to talk about the premium differences year over year and also your commission differences year over year, if you look at a 12-month or less plan from the same 5K 100% plan that we looked at on the previous screen, $132.31 premium year one, year two and year three, not applicable. We only wrote up to a 12-month term. For a street-level agent, 20% year one comp, that's your commission. And then if you are in an advance applies. If you go up the stream here, a 12x2, there is a surcharge for a 12x2 for that first and second year. But at the end of the day, you're buying rate certainty for 2 years on that premium. The only adjustment that you'll see on year one to year two is going to be maybe a trend factor, or it may be more significant if your client hits an age band. So, for example, if they're 39, they turn 40 in that second year, 49, 50, so on and so forth. But as you'll see, the comp for year one and year two remains flat across the board. And if they're on advance, they're advanced for both years. Now, a 3-year renewal extends the runway the longest possible for your client. Now, the surcharge for the renewal is not as high as a 12x2, but as you'll see in years 2 and 3, estimated increases will show that if those ring true based upon trend, renewal factors, experience, that your 3-year horizon on the premium does increase more so than the 12x2 would. Now, on the comp side, the first year you make a 3% increase on your comp, but as you'll see in years 2 and 3, it reduces down to 10%. And on your advance, you only get 1 year only. So if you look on that 2-year horizon on a premium standpoint, the 12x2 versus the 3-year renewal, that's the decision you have to make. On the 3-year renewal, I can extend the runway for 3 years, but if that renewal premium after year 1 doesn't come back the way we wanted it to, am I going to rewrite that policy after year 1? Or am I going to rewrite that policy after year 2 or look at it for my client? So that's where the 2x12 comes into play, because you can afford that certainty not only for your client, but also that certainty on commission for 2 years over that 2-year horizon. It's going to match, if not out, or it's going to better that 3-year renewal. So the 12x2, we look at that as kind of a sweet spot. So when you look at durational components, which do I pick? These are the 3 that we would recommend that you would walk your client down the path based upon what they're telling you their needs are. So if you look at it from a standpoint of the 12-month lever, some clients are okay with that annual review, getting back into that lowest entry point. Single pay, if they're so inclined as well. 12 months will still apply, especially as the agents who are in this space. They're used to doing that year over year, but they also are used to getting that first year comp every year. The 12x2 level, for the agent that says, man, I wish I didn't have to write these short-term medical plans every year. I'd like to be able to write it and then just maybe review it, but not have to rewrite it again. The 12x2 lever not only answers that durational component of extending the runway, but it also provides the 2 years of rate certainty with fair and known pricing, and also that certainty on commission for the agent, so they're not going to have to experience that drop after year 1. This allows you, the agent, to source new business, either that next enrollment, without having to revisit this client. But for the 3-year lever, really what we're doing here is we're extending the runway as far as possible for those who might be willing to risk that rate for that evidence of insurability. But they're also going to be looking at it from a flexible standpoint, that if that renewal is not as good as we thought it would, or we were hoping for, and if the client is eligible, then they will maybe take a look at rewriting or changing the plan design to adjust that premium to a lower entry point. Now that being said, there is no requirement about waiting periods. You can cancel at any time, rewrite at any time based upon the client need. So at this time, that is our policy on that front. So where we look at it, though, from a standpoint of the sweet spot, me personally, I like the 12x2. If I'm sitting in an agent's shoes, I know that I can provide them 24 months of coverage. I can provide them rate certainty. And for me and my business, I don't have to experience a drop in commission on year 2. So it answers a question, or it solves a problem of, I don't want to rewrite this client every 6 months or every 2 years. It solves that problem. For your client, it solves the problem of, what's my rate going to be that second year? They already know at the time of application. But if you're looking to solve for that evidence of insurability for that full 3 years, the 3-year renewal lever is an excellent option to choose as well. So just rounding everything out, though, we talked about our short-term medical product, and hopefully we gave you some insight as to some differences and some advantages of how this product can fit in your business. We also talk about our full product line and utilizing it to its full service. Now, as an agent, you can provide the cookie cutter option and say, okay, well, we covered your health plan, great, catastrophic claims. Well, what happens if your client calls you up and says, well, hey, I just had a claim, now I'm out $10,000. I only have $1,500 to my name. That puts you kind of in a pickle, saying, okay, well, wait a minute. Well, we can't really do anything now because you had the claim. Maybe we'll have to set up a GoFundMe, or maybe we can set up a benefit to help you offset your bills, what have you. So even though that the core health plan covers up to that $100,000 or $1 million or $5 million for the major medical side. What about the out-of-pocket exposure for your client that seems to be rising year over year? Can they pay for that out-of-pocket? If you were to ask them if they can pen that check, many of them will say it's going to be awfully tough. And this is where we can provide them that full service solution to not only solve for the major medical needs, but also for that upfront need that can be a real budget buster or that damage assets that the client has worked so hard to build up. And with that is our suite of supplemental products. We call it the cure for what's become an epidemic of the MOOPs, the maximum out-of-pocket exposure epidemic. It's going up every year. Clients are more exposed to it, and it seems as though consumers are finding that widening gap to be more and more challenging. We talked about our dental plan. Dental is a slam dunk plan, but where we're seeing that getting to the top of that bell curve with the early adopters becoming more mainstream is accident and critical illness or specified disease plans. And there are certain products that are available as well. I can spend 3 hours on all these products, but for sake of time, a product like the Plan Enhancer, where it not only covers for accident, but you have the option to put in cancer, heart, stroke, hospital riders as well to help offset the out-of-pocket exposure that your client faces. Now, there are also products that are available that will provide cash above and beyond, such as our specified disease plans, to offset not only the out-of-pocket that they face with a catastrophic diagnosis, but also living expenses or expenses toward home modifications that are unintended when it comes to a catastrophic diagnosis. So you can be the difference maker for the client, not only at the time of claim when it comes to the coverage for the major medical side of things, but also coverage for the financial aspect that your client has to face on their side with the out-of-pocket exposure. So the thing is, though, is that many consumers don't know these products exist, and this is where you come into play. You hear the Wayne Gretzky line: "You miss 100% of the shots you don't take," or Michael Jordan says, "You miss 100% of the shots you don't take." Well, what if you don't offer it to them, but maybe one of your competitors in the market does? Statistics show too that cancer plans, especially, sell at a woefully low rate, considering the statistics of who will be diagnosed or will face a cancer diagnosis in their lifetime. Would more or less money be helpful to them at that time? And lastly, once you've taken care of your client, you can earn more commission while you're being a better agent at the same time and providing that full service solution to your client for all the needs that they might, not only the financial protection from a catastrophic claim, but a financial protection from their out-of-pocket exposure. You can write our supplemental plans in many ways, shapes, or forms. You can check a box and write it on the same application with your short-term medical plan. You can sell them standalone. So if you are writing a different core products such as ACA, Christian Share, fixed benefit plans, what have you, you can write these policies to help offset exposure on those products as well, because no matter the core plan, there will be exposure. Lastly, if you are a group agent, you can also put a package of supplemental options available on a list bill. All of our products, except for short-term medical, are available to be put on a list bill for employer or non-employer groups of 2 or more. So another way to sell products, and not only sell product, but also get access to your next client. You may have a relationship with the business owner, but if they have 10 employees, that allows you FaceTime to write individual plans, build to a group, but write individual plans and those clients become your clients as well. And therefore, if you are predominantly a Medicare writing agent, these clients will eventually age into Medicare as well. So it's a good way to increase your individual client base through your relationship with a business owner. So we always get at this time of year, we kind of get that year in review and say, hey, Andy, what are your best agents doing? How are your top agents going to market? What are they doing this time of year to stay busy? Well, in general, our agents are telling the durational story, whether it's 12 months or 24 or 36 months, but they're leveraging the story against ACA. And for the right client, telling the story how it can be better. But they're also selling from the top down versus bottom up. Many agents get in the habit of selling that core product, but then once they've got that commitment on that core product, they're saying, well, I got these other products too that I want to talk about. That works in some cases, but it really hampers your closing ability on those extra products because psychologically that client has already purchased. Now you're just trying to upsell them. What our agents, or the top selling agents, doing, they are selling from the top down, from the sense of, Mr. and Ms. Client, I have this solution based on what you're telling me. For the major medical component, you're going to have a $5,000 maximum out of pocket for inpatient, for outpatient, and for doctor visits. Network discounts will apply with the Aetna Open Choice. But within this benefit package we're putting together for you, this also has coverage if you're injured by accident. It's going to pay you back up to $5,000 minus a small deductible. Therefore, it's going to wipe out your out-of-pocket in the event of an accident. Or on the flip side, if you're hospitalized because you have your appendix out or because you're sick, this benefit's also going to pay you up to $5,000 to offset your hospital expenses as well. Lastly, if you do get a catastrophic diagnosis, even though you have that $5,000 deductible, it's going to pay you a lump sum for $25,000 for a heart attack or a stroke event. And then again, if you're diagnosed with cancer for the first time. So, Mr. and Ms. Client, does this sound like it solves everything that you're looking for? Yes, it does. Great. Now, this is based upon what you're telling me your budget is. It's going to your monthly premium that's going to be drafted from your account is going to be X. Does this sound good? Yes. Okay. So really, you're selling 3 or 4 products, but at the end of the day, we bundle bill all those products as well. So your client is only seeing that package premium that comes out of their bank account once per month. So that's what our top agents are doing it, and how they're maximizing their opportunities with NatGen. Our best agents are selling at least 1.5 products in addition to the short-term medical, and their revenue increases by about 30% by doing so as well. So from that standpoint, within our coverage builder platform that you'll have access to, you'll be able to create these packages so you can just click and go and save you time as well to maximize your cross-sell and provide your client with that top-notch full service solution that they deserve, number one, but in a lot of cases they will need because of their ability to offset out-of-pocket exposure. So in your agent toolkit, you could sell just short-term medical. You're going to get a fair and equitable price. This is a 2x12. And compared to the lowest cost bronze plan, you're still saving your client 63% and reducing their max out-of-pocket by $3,000 and change. So it's a good deal for your client, no question. And if you're used to a per member per month type of equation on the ACA side, if you were related to a per member per month, you're likely earning more on the per member per month as well with our short-term medical plan, even though we pay out a percentage. But if we were to take this 12x2 plan, the 5K 100%, and we were to add on a plan enhancer with a 5K benefit for accident medical expense, and then also for hospitalization due to sickness. In addition, cancer, heart attack, and stroke for $25,000 lump sum. The one monthly draft that your client is going to experience is $211.44. So comparing that still to that lowest cost plan in the marketplace, your client still saves 50% compared to the status quo, and their out-of-pocket exposure is wiped out because of the enhancements that we put on this particular package. Their bill is going to be $211.44. They're not going to be nickel and dime on multiple drafts. And in addition, your per member per month increases substantially as well. So thinking about, yes, you can go you do the status quo with just the core plan, but you can go the extra mile and provide that full service solution and still save your clients substantial dollars, but also put more revenue in the hands of your agency as well. So that can maybe perhaps help you with your cost per acquisition or lower your cost per acquisition, but also free up more dollars to maybe more lead generation. And we talked about the different plan lanes. So now in this one, we're going to just change the co-insurance. We're going to change the short-term medical plan from 100% co-insurance to 50% co-insurance. Now we've reduced that premium by about $25, and we've added more benefit to the enhancements. But overall, the package still stays the same when it comes to offsetting the out-of-pocket exposure. And your per member per month is going to be about the same, but you've dropped $25 a month, or over the course of the plan year, my mental math isn't going to give you the number, but $25 times 12 months, that could be a nice savings for your client, or offset or pay for one of these products that you're going to, in addition, that you're going to sell. But still substantial savings. It keeps it under that magic $200 price point for this particular client, and you're driving revenue to your agency as well. And remember, the first year commission on the short term is 20%, and the 12x2, it's also 20% for that second year. So here's a family example of how a family will work. 57% savings from the status quo with that 5K 100% package. So it's substantial savings for your client of premier protection, not only the major medical, but you're protecting your client from their out-of-pocket exposure as well. And per member per month, you have $34 times 4 family members per month, $34 per family member that you're getting paid on. Folks, it's a win-win situation. And if you start to send in sales and you're not considering these out-of-pocket protectors to go along with it, you're only doing your client a disservice and your revenue for your agency a disservice as well, because you are still providing substantial savings considering the status quo. Changing the co-insurance on the family, now you're under that $500 magic number. And although your per member per month goes down a little bit, it's still substantially higher than what you might pay on the ACA side. And we're still saving the client 65% compared to the lowest cost plan. So with that, with all these relativities and the plan lane, the levers that you pull, what your client gets on the short-term side, 24 months of rate certainty, no pre-X check after the first year, but you've also provided financial protection from their out-of-pocket exposure. On an accident, if you were to ask your client, would you rather pay $250 or $5,000 without going down the road, if I got these extra products, they're going to likely tell you that they'd rather pay $250, and that makes opening up the conversation for that accident plan a lot more simpler. If you ask them, could they use a lump sum cash benefit at the time of a diagnosis or in the event of a diagnosis, they're likely going to tell you, yes, tell me more. So those are some door openers for you to not only sell the short term, but also the additional products that can help protect them from that high out-of-pocket exposure. So significant savings to the status quo. Again, we're going to do it on one bank draft, so your client sees one draft from National General each month. And this allows you to source more business while you can earn a predictable commission for 2 years, whether it's that bridge to Medicare, whether it is a bridge the gap between coverages, or it's that client that is purchasing for the traditional method, or the new client that is purchasing it because they're looking for premier savings compared to the status quo because it fits them better. Our enrollment technology, once you get contracted, you'll be able to set up your quoting platform. With Coverage Builder, you can do quotes and enrollment that's agent-facing, say belly-to-belly or face-to-face, over the phone. Consumer-facing, you can send your quotes to your client to apply online, or you'll also have the ability to send them a link that's tied to your agent number where they can create the package themselves. But again, you can create these preset packages in your quoting tool, and we can guide you down the path of how to create those and into the preset, click and go custom benefit packages that the system will provide. Once your client gets a policy issued, they can go into mynatgen.com and download all of their policy information. Temporary ID cards, 7 to 14 business days is when the real ID cards will show in the mail. But this is your client's member portal at mynatgen.com. And once that policy is issued, you will have a back office that will have access to see all your clients. And if you have downline agents, they'll have access to your downline agents production as well. It will always allow you to view down. An agent will never be able to view up the hierarchy, but also have resources such as product guide, short-term medical guide, product availability guide, list bill information as well, and also user guides available within this system for you to utilize. And lastly, to get contracted to sell NatGen, get a hold of Todd. They'll get you set up. It's a 24 to 40 hour turnaround to get up and running on product, but this will apply for both under and over 65 products. So whether you're selling a short-term medical or a Medicare, it'll apply for both. You'll have access to both sides of our business on the individual front. But when you do complete contracting, you'll receive a welcome email to register for your system. So be sure to do that once you get contracted. The back office, again, we talked about that, but we're also going to initiate a training program. We are going to do an email campaign that will provide you information on product, but also will provide you with opportunities for more webinars that we do periodically, either new agent webinars or product or sales concepts, what have you. So be on the lookout for that as you get contracted. And lastly, at natgenhealth.com, under the agents or brokers tab, you can go to marketing materials. All of our brochures are available for download. We don't have a print shop to be able to provide supplies, so materials tend to update from time to time, so therefore it's more cost effective for you to print out what you want. We do have consumer-facing trifold brochures, marketing materials as well at this site, as well as all claim forms for all of our ancillary products as well. So bookmark all these sites underneath maybe a NatGen bookmark in on your computer, your browser, and you'll have that at a click of a button for you as you proceed with NatGen. And lastly, for additional self-training, we do have a YouTube channel under National General Accident and Health. There's anywhere from 3 to 15-minute videos on each product on its own. Like I said, we could have spent 3 or 4 hours going through each product with a fine-tooth comb. Our YouTube channel will allow you to do that at your own leisure, but also provide you system demos on quoting or creating a package, our Med-Sup enrollment tool, and then how to utilize your back office as well. But as I finish off here, in addition to senior insurance marketing, our team is here to support you and remove those roadblocks to writing business and make life easy for you. So please be sure to lean on us with any questions that you have as you get started, and you'll likely be hearing from us as well, just to make sure everything's going smooth and help you set up your back office, help you set up your quoting tool, and also help you set those packages to make sure you're maximizing all opportunities with National General. So with that, I'd like to thank you for your time and tuning into today's session. I'm going to turn it back to Todd at Senior Insurance Marketing, and again, look forward to doing business with you.
Thanks, Andy. Really appreciate it. And give us a call here at Senior Insurance Marketing, 877-800-3080, and we'd be happy to help you out. Get contracted with National General for, like Andy said, once you get contracted with National General, you can sell the short-term medical as well as the Medicare supplement products as all in one contract. So be happy to help you out, run a quote for you, or help you in any way. But give us a call, 877-800-3080, and we'll be happy to help you out with National General. Thanks again, everyone. Thanks, Andy. I really appreciate you telling us the story about the short-term medical with National General. It's a great product, and it's a growing market out there. So it's a huge opportunity for you. So give us a call. We're here to help you grow your business. Thanks again, everyone.